Howdy everybody. It is Leo here yet again with another video, and this time we're doing something a little different. We're doing some car style content because I've got a 4-hour drive ahead. I'm heading to Yosemite right now, so I decided what better time than to yap to you guys for 20 minutes about the most common mistakes that I see beginner traders make. Because I've had constant DMs on Twitter and on Instagram of a lot of you asking me, hey Leo, how do you become profitable? Hey Leo, how do you take payouts? Hey Leo, why do I keep blowing my accounts? And so the video today is kind of just gonna go through all those things, the psychological struggles of how to become a profitable trader, what separates and what differentiates a profitable trader from an unprofitable trader, what separates a payout trader from a non-payout trader. So that's what we're gonna get into today. And I've got a lot of time to talk in the car, so I think this is gonna be a good opportunity to kind of answer a lot of those pain points for many of you wanting to watch this video and wanting to get the answers to those questions. So other than that, let's get to it. So first and foremost, what really separates a profitable trader from an unprofitable trader? And I really think the number one difference is the ability to accept a red day or a red trade. Before anything, before even discipline or identifying an entry model, I think the basis of all success from a profitable to an unprofitable trader comes down to the sole reason of if you're able to accept a red trade or if you're able to accept a red day. Because what I tend to notice with a lot of clients, a lot of traders that I work with, as you know guys, I'm an analyst and I also do a lot of one-on-one mentorships with people. How and what do I notice are some of the biggest characteristics from what causes somebody to lose profitability as a trader? And the biggest thing that I find is those people are not able to accept a red trade or a red day. And I truly think there's a lot of importance with that when it comes to trading, because many of you out there, you think you can accept a red trade, but then there's that portion in your mind that keeps switching like, oh my God, why am I red? I could turn that green. And you could literally take a trade at break even and you're down $7 on your prop firm 50K just from the fees of the contracts you were paying. And still some portion in your brain is gonna flip a switch and you're gonna be like, well, like those $7, that's only $7. I can make more money. Like if I just take a $10 trade, I'll be happy with a $3 green day. And then let's say that you actually end up making a $10 green trade and you're up now $3 profit on the day, and you see that little green box in your prop firm calendar view, but then you look at that number and your brain starts to ask itself and go, well, I could make that more money because $3 is nothing. I made $400 yesterday. Why can't I do $400 again? Why can't I make $800 again? And you have no idea the amount of people that I've talked to that are like this. The amount of people that I meet and that I teach that are like, no, but like, you don't understand. Like, I could have made more money. I can make more money. It's just a green day. Like if I take one more trade, and it's always the idea of that one more trade. One more trade, one more green trade. But what if that second trade, so you take the first loss, then you take the second win, and then you take a third trade. And what if that third trade goes red again? But at this point, you're not worrying about your size. You're not worrying about the type of entry you're taking. You're primarily just fixated on the idea of seeing a bigger number on your screen. And that right there is what destroys so many of you. And I guarantee many of you that clicked on this video to watch for some advice on how to actually improve as a prop firm or a personal account trader have dealt with this exact issue. You have dealt with the idea that you cannot accept a red day or a red trade, and it is murdering you. You've blown so many accounts because you look at a red trade and you go, I can make more, I can make it back. But then when you make it back, you just take another red trade, which causes you to go on tilt, and then you oversize. Let's say you took one mini and you took a red trade on it, but now you want to make it back twice as fast. You enter in 2 minis on that second trade, but that second trade isn't successful, and so now you're down 3x what you could have been if you had just stopped it at your 1 hour loss. But why? But why? Right? The real question is why? Why would you stop, right? And that's the gambling side of your brain that's causing you to believe that the only way that you can be profitable is if you see a green day every day. And that's the one thing that I despise about social media is there's so many false realities of these traders saying, here's how I made $70,000 today, here's how I made $10,000 today, and showcase only the winners on their profile and never have the transparency to show they're losers. Because what's going to sell their course? What's going to sell their product more? It's the winning days. It's not the losing days. But that's where a lot of you see the major issue. It's the idea that you see so many of these influencers, these gurus online making so much money that you think that you can just replicate that. Even whether or not you have a defined entry model, you think that you can just replicate that and take a win every day. And for some of you, I'm sure you've taken many green days in a row, but I also know that those of you that have taken many green days in a row without being able to justify a red trade or a red day have blown those accounts that have been either 1 day away from a payout or have maybe secured a payout, but the second you get close to your secondary payout, you blow it again, right? And so I really just wanted to start this video off aggressively with that one of the most important skills you can learn as a trader is just to accept a red trade or a red day. If you can look at the markets and go, hey, I took a red trade today. I don't see a setup presenting itself. I'm not comfortable entering in the market, or this market isn't for me. Or hey, my risk management system, which we'll talk about in just a second, is telling me that I've hit my maximum trades for the day. I'm just gonna accept a red day. Because if you keep your red days smaller and your green days larger, whether or not you're at a 50% win rate or a 45% win rate, it depends on the entry model and your risk management model, you're going to become profitable. Does it take discipline? Does it take time? Absolutely. As does with everything, right? If you want to be a faster runner, you have to run consistently. If you want to be a stronger lifter, you've got to lift consistently. You have to eat consistently, right? Everything in life comes with some level of discipline and some level of consistency. And so if you're not meeting that criteria, even because trading is online, right? So in your brain, you're like, oh, it's just mental discipline. It's a lot easier than physical discipline, right? Going to the gym, you have to actively and physically get yourself up, eat the protein, make your meals, go to the gym, lift the weights. Trading is the same thing, but you're mentally trying to restructure your brain to be okay with taking these trades, with taking these losses, with staying consistent with the same entry model, the same risk management model. And boy, oh boy, does that get boring. And it gets so boring. We'll cover this later in the video as well. But I just wanted to be clear with that. So first and foremost, before we even get into any of the other concepts in this video, I want you to ask yourself the why. Why do you keep trading after a red trade? Why are you over trading? What is going on in your brain when you take a trade that ends up losing? Are you getting pissed off? Is it because you were unhappy with your entry model? Is it because you just saw a really aggressive PA candle and you felt like you had FOMO, that you were missing out on some type of move? Because if that's the reality, I'm sorry to say it to you, you're not going to become profitable. Like, there's not a single part of your trading methodology that's going to become profitable if you just look at high amounts of price action, aggressive candle, news candles, or an undefined entry model and just take a trade and hope that it goes in your direction. Because markets are 50-50. Realistically, they are, but why gamble that when you can clearly come up with a system that would up your chances, up your probability, and also manage your risk accordingly? So just think about that, okay? Because that's a really big thing. Now, the second thing. So we just talked about not being able to accept a red day and a red trade, which causes a lot of you to go on tilt, lose your accounts. Even those of you that are 1 day away from your payout, and you think that because you're 1 day away, you need to make that last bit of profit, and that's the day that you end up going on tilt and losing your account. But now the next thing is defining a proper risk management model. I've talked about this in most of my videos. All of my trade recap videos, I go through how exactly I define my risk. Before I enter every trade, I know exactly where my stop loss is going to be. I know exactly where my draws on liquidity lie. I know exactly where I'm intending price to go, where liquidity is being swept, where my stop loss lies. And so risk management from the actual technical side of things is defining truly what your RR looks like. Am I risking 1R to make 1R? Am I going 1 to 1.5, 2 to 1R, so on and so forth? It really depends on the type of entry model that you guys trade. And for many of you who know my model, I trade 2 to 1 risk to reward ratio. So for every $100 that I risk on a trade, I'm intending making $200 on a trade. And so from a risk management standpoint, it's important that you set a list and a criteria that has to always be met. Because if you want to build consistency as a trader, you need to define risk management. Because what's the easiest way to improve is being able to find where your mistakes lie if you're staying consistent with the same model. If I'm changing my risk management every trade, if I'm changing my size every trade, if I'm changing my entry model every trade, I'm not going to know where my true mistakes lie because new mistakes are coming up. But if you define one entry model, one risk management model, and you stay consistent with that, every time you take a loss following your risk management system, that is considered a valuable loss because it is a loss that is defined within your risk management. And so for every trade that you win and for every trade that you lose, you know, and you can really go back and you can back test and you can see what went well, what didn't go well in that trade because you're following the same system. And so now you can really start to ask yourself the questions of, well, mentally, did I rush into that entry? Oh, like mentally, maybe probability just took me out on this one, or I forgot about news data, or Trump was talking at 11, I didn't see that and I got stopped out of my position, right? There's many different ways that you can ask yourself and really dive into the psychological side of your trades once you define that entry model system and that risk management system, because then the true mistakes and the true improvement comes from rinsing and repeating that process and learning from what mistakes you made with that same system and fine tweaking it so that you can not make that mistake again and make a more reliable trade, make a higher probability trade, so on and so forth. But I also want to touch on the fact that risk management isn't just the technical side. Risk management comes from telling yourself how many times a day you want to trade. Many of you that have been on my YouTube live streams or on my Discord live streams know that I limit myself to 2 trades a day maximum. And if I take 2 losses on the day, I consider it a 2-hour loss on the day, and I move on to the next day. Because if I take 2 trade losses in a row, especially as myself, I'm an experienced day trader, 2 losses in a row either means that the market conditions just weren't suitable for my entry model, and it's just not a day for me to trade. Maybe I just wasn't finding the best probability setups, which means that there could be other things. Or if I take 2 losses, sometimes there's externalities in my life. I have other stressors outside of the trading scene that might be causing me or hindering my trading performance. And so when you guys are defining this risk management system and not just your stop loss placement, your take profit and your sizing, you should be asking yourself how many trades a day you want to call it a cut. And so for myself, like from risk management, and I want to touch on this for a couple minutes. When I trade every single day, I come with the idea of this. I have 2 trades a day maximum. If I start off, let's say New York AM session with a beautiful trade and I smash a 2-hour trade with my proper size first thing in the morning, I call it a day. Because if I've taken a very good win and I've hit my daily profit goal and I've hit my RR goal on the day, there's no reason for me to take another trade because I've now hit the monetary value that I wanted, but I also hit a successful trade. Even just stripping away the monetary value, I have officially taken a trade that was defined by my entry model, defined by my risk management model, and I'm happy and confident with it. And so for myself, I don't need to take another trade because I'm already green on the day. Now, let's say I take a trade during New York AM session and it becomes a loss, right? First trade on the day becomes a loss. Well, I've now given myself the opportunity to take one more trade. And this one more trade gives me the flexibility that, hey, let's wait for another A+ setup. And if that A+ setup goes in the right direction and I win, well, I'm green on the day. Not by a lot, but if my 2R plays out for my second trade, I now subsidize that 1R loss with a 2R win, which puts me at 1R on the day. And so yes, it's not an incredible green day, but it's still a green day. And that's what builds the true consistency within it. And if I take 2 green trades in a row, like if I take one really good trade and then I see another A+ setup form, I'm gonna take the A+ setup. And if it's 2 winners on the day, I walk away even happier because I'll be up anywhere between 4, 5, 6, 7R, who knows, right? It just depends on market conditions. And so that's the true beauty of it. And the reason why I wanted to explain this to you guys. Risk management doesn't just come from the technical side of your stop loss and your TP placement. It comes also from the idea of limiting yourself to the number of trades you can take, as well as the size, right? Don't change your size per trade just depending on how you feel. That's not okay. So that's just one thing I wanted to make note of for you guys. And so as you define this entry model and you define this risk management model, ask yourself, and also use the system I gave you guys. Try that for 30 days. And I guarantee if you guys just spend 30 days sticking with the risk management system that I've predefined on this video, and you stay with one consistent entry model and a defined technical risk system with your stop loss placement and your TP depending on the model that you're trading, I guarantee within 30 days, even just a week of following that process, your trading game is going to change. Your consistency is going to get significantly better. You as a trader are going to feel a lot more confident in the way you approach markets. You're also going to feel a lot more comfortable in taking trades because you know and you've seen the same setup over and over and over again. And so it's less of a question of, well, like, is this really a good setup? And it's more a, oh, I've seen this model before. My model is printing. I know what happens. And if it doesn't work out, I know that market conditions weren't suitable for it. Or maybe I just took a bad trade and I'm okay with that. So those are my top two. Not accepting the red day and not defining a proper risk management system. Both the technical one, but also the emotional side. How many trades do I want to be taking? Because that's what truly is going to build discipline. Now, a big one, and this one goes for a lot of you prop firm traders out there. So I'm targeting all of you, a lot of you in this video that might not be trading personal accounts. But for prop firm traders, I know a lot of you on this video probably own some 50K funded accounts. Funded, or maybe some combines. Maybe you guys own some valuation phase 50K accounts. My question to you is, why are you trading minis on a 50K account? I just gotta be honest. And this might be a hot take, because maybe one mini is acceptable if the stop loss is tight enough. But for those of you that are still trying to figure out an entry model and try to just build general consistency in markets, why are you trading a mini? Why are you trading an NQ mini or an ES mini or a YM mini? Because now the second you enter a trade and you move your stop loss, or you have your stop loss set and you see that your risk is $800 or $700, that's nearly 50% of your $2,000 drawdown on your prop firm. Just ask yourself that for just 1 second. Because I've taught so many people and I go, oh, like they'll send me like, hey, I'm down $1,100 on the day. And I'm like, oh my God, how does that happen? And they send me a screenshot and they're sizing in with 2 to 3 minis on an evaluation $50,000 account with a $2,000 drawdown. What are you doing? If you want to try and focus on the consistency, you need to just build the process behind the trades before you even consider the profits. Because if you consider the profits before the process, you're going to entirely diminish the value of the true process behind trading. And I mean that. I mean that so seriously, it's not even funny. Now, probably the biggest piece of advice I can give you guys, I touched on it a little bit in that last point, process over profits. I swear there's gonna be a day that I make t-shirts and I tattoo this on every single one of my students. I'm joking. But if you focus on the profits before the process, never speak to me again. I don't want to hear your voice, ever. I don't want to hear it. If you enter a trade on and this even goes for the prop firm traders, on an evaluation account, and you care about how much money you're potentially going to make or potentially going to lose on an evaluation account, like if you truly focus on the profit value of a trade before the process of your trade entry, you're not going to become profitable. Because the true consistency in trading comes from falling in love with the process. And if you fall in love with the process, the profits will follow. And I can't guarantee that it's gonna happen within 1 month. I can't guarantee it's gonna happen within 6 months or a year, and sometimes even 2 years, right? For me to become a profitable trader, I've been trading since January 7th of 2019, and I was unprofitable for over 2 years. And I finally built some consistency, fell in love with the process, and once I really started to fall in love with the process, profits started to roll in. But this is the thing about trading, is once you really dive into the process, you fall in love with it, and you just get addicted to the process behind the trades, your entry models, your risk management, so on and so forth, the rest falls into place. And the profits compounded way quicker than I could have ever imagined. For those of you that don't know, I'm 22 years old. I started trading on a custodial account. I started penny stock trading, got fried from penny stock trading, right? Moved into options, finally found some success in options trading. After I found some success in options, decided to get more involved with swing trading options, dove more into futures day trading, found a lot of consistency in futures day trading. And the second I started to fall in love with the process behind the trades, just being addicted to seeing my trade methodology work out. Like when I came into market with conviction, I was like, I'm bearish bias on the day, here's why. And that bias played out, I became addicted to the idea of trading and the process. And soon enough, those small profits started to become bigger profits, which slowly ramped up and became bigger and bigger profits. And it all just started to compound so quick. And so I can't guarantee a time frame for you guys because every trader is different. Every trader goes through a different experience. Some of you will become profitable a lot quicker than others. It just depends on the process and how long it takes you to build that consistency as a trader. But the one thing I can guarantee to so many of you, and almost all of you watching this video, if you fall in love with the process and really put your head down on the process, I can guarantee the profits will come. But if you focus on the profits and don't fall in love with the process because you're so dialed in on the profits that when you see red days or red trades, you start to hate trading as a whole, you're never gonna be consistent. You're never gonna see that payout from a prop firm. You're never gonna see the payouts roll in consistently. You're never going to see some type of consistency. And so yeah, those are kind of some of the main points I wanted to touch on today's video, right? And we'll make some more videos like this, but I really just wanted to make this a video and focus on those 4 main points. And so I really do believe in many of you. And those of you that are watching all the way through this video, congratulations, because you're spending the time to truly get involved with your education and really dial in with the psychology behind your trading. And for those of you taking notes, maybe feel some type of personal connection to what I'm saying, and maybe that's fueling some type of fire inside of you. I'm excited for your journey, but just remember, not every trade's a winner. Not every day is a winning day. Not every week is a winning week. You're also not gonna have days that you trade, and that's okay. But fall in love with the process, and I guarantee the profits are gonna come. And for those of you that are already maybe halfway through your journey or just on the brim of breaking profitability, I'm excited for your future, and let's get after it, because this is what trading is about. We're a community. We're all here with the same goal of making money and becoming financially free. So let's make that fucking shit happen, okay? Let's just make it happen. Anyways, guys, that's all I have for you guys today. So much love for every single one of you watching this video, as always. And if you guys do enjoy these type of videos, maybe like it, maybe subscribe. I'll leave that up to you. I'm not gonna ask for too much. But anyways, much love, guys. I'll see you all in the next video. Bye.